If you had invested in this real estate market 2 years ago, you would have earned an over 80% return. And it's just beginning to get good. The kind of returns people have been earning in Alberta, roughly 40% a year for the last 2 years, are way above what most people can get. Certainly in a CD or money market fund, which is yielding about 4 or 5% today. Even stocks have a long-term rate of return of about 10 or 11%. So there is risk in investing in real estate, but the result is the kind of returns you're getting, which could be 20 to 40%, some cases even more than that, certainly are worth taking at least for part of your portfolio.
Why Alberta, why now? I guess that's the number one question. I think most of North America will look at Alberta and say, you know what, it's oil. You guys are just so lucky you got all that oil percolating, and that is fundamentally correct. We've got a great furnace that burns with and churns a lot of money for our governments, but that's not what is attracting people to Alberta. It's jobs. Plain and simple, jobs. If you can take your income from anywhere else in Canada today and transfer it to Alberta, you'll net roughly a 30% gain in take-home pay. So the fundamental reason why real estate's booming is the in-migration of people because of the good quality of life and the jobs that are available here as a consequence of that burning fire.
Right now, Alberta represents the largest politically stable source of oil in the world today. Well, it's been huge. You know, we've led the country in terms of in-migration for many years now. Right now in Edmonton, there's an absolute shortage of housing. Our rental rate is virtually zero. And what that's done is that's prevented a number of people from moving here because there's legions of stories right now of people wanting to move to Edmonton but either can't find accommodation or can't find accommodation at a cost that they want. So as the amount of accommodation has gone down, prices have also gone up. So one of the big issues that we have to deal with here is the availability and affordability of housing.
We are expecting by the year 2012 to have an influx of 83,000 people, which is the size of one of our medium-sized cities, such as Red Deer, which is just south of us. And by 2022, probably the total amount will be more like 400,000. So we feel that real estate is definitely a great investment and will be for the long term.
It's been the best real estate market in North America, and I think you could almost say internationally. This year, since January 1, we're up 24%, which in itself would be a significant number, but we're well over 75%, and in the higher end homes, we're at well over 100% return year over year. You're going to be seeing 8 to 10, 12% annual returns over the next decade and perhaps even beyond.
What I like about the opportunity in Alberta is it's a long-term situation. It's not a short-term speculative bubble that's about to burst. This has got a furnace of the oil development that's kind of heating the entire market up. And with oil at very high prices, probably going to go even higher in the long run, that's going to continue to sustain this market and in fact spread out throughout the entire economy. One of the reasons it's a good real estate market is it's attracting highly paid, well-educated people, in many cases that have nothing to do with the oil business. The education business, they have a lot of hospitals here, they've got a nanotechnology center. So any place that's attracting in-migration, particularly of highly paid people, is going to be a good real estate market. And because Alberta is in the early stages of this process, I think there's a huge potential for the long term. As long as oil stays relatively high, what's probably going to, the potential is just huge on the upside, with a lot of people moving in and still a great shortage of housing.
We're not importing workers, we're importing families. If you drive in from the airport, I would doubt if you would see less than 20 signs saying we need somebody immediately. So we have an economy that is at full employment essentially, projected to grow at 4 to 5% a year for the foreseeable future. So the pressure on jobs is going to continue. The province is wealthy and it's reinvesting a huge part of that in quality of life issues. Like I could sit here and make you a very strong case that we probably have the best medical system in North America here in Alberta in terms of the quality of healthcare and there's no doubt we probably have the best quality public education in North America. That's repeatedly said. Edmonton is renowned for its cultural environment. The arts are very big here. Environmentally, I think we have more parks per capita than more park area per capita than any city in North America. So a lot of people come here for the jobs and a lot of people stay here for the quality of life. Last week, the chief economist of the Toronto Dominion Bank gave his report on called the Calgary-Edmonton Corridor. And he said if the Calgary-Edmonton Corridor was its own country, it would have the highest GDP per capita in the world, bar none, and substantially above that of the United States.
The suburbs have grown rapidly, mostly because there was opportunity for single-family homes. So, and Edmonton is building, in the process of building, a large ring road that goes around the whole city, which is called the Anthony Henday. So Edmonton is not a city that has one central downtown. I foresee the future of Edmonton as a city that has a series of connected urban villages or mini downtowns.
Edmonton is a very unique city in North America. There are a few, but they're rare, and the rarity is that the metropolitan area has about 15 smaller towns and smaller centers that are within a 30-kilometer radius. So a couple years ago, I banked on that happening and looked for properties in locations like Stony Plain, in locations like Sherwood Park, in locations like Kalmar, where, and I tried to get there before, again, the stampede. And with the expectation that if prices rose dramatically in the main engine of Edmonton, there would be a corresponding increase in these suburban communities. And that turned out to be very insightful, because that's exactly what's happened. The prices in these communities have risen dramatically. Still, there's a margin of economy by living and buying in those areas, but capitalizing and being on the ground early means that we're still gaining a huge upside as a consequence of that decision. So the suburban Edmonton area still has a myriad of opportunities for investors to buy and develop in the commercial and multifamily, as well as the destination residential areas.
There are certain areas of Edmonton where there isn't a lot for sale, and those are in your established executive areas in the West End and Southwest Edmonton that really have very few properties for sale. And professional people want to buy in those properties, and there is very little selection for them.
The properties that I'm looking at to invest in and to bring investors into definitely cater to medium and higher income kinds of home buyers. These are people who can afford these rising prices, who can afford to have custom homes, who can afford to have a decent amount of land around them. Usually a quarter acre, a half acre, and sometimes as much as 10 acres in a particular development. So these are the kind of things that only medium and higher income people can afford, and there's lots and lots of medium and higher income people moving into the Alberta area. These may be professors being brought in by the University of Alberta. They may be doctors for the hospitals and research facilities. And they may be related to the oil companies one way or the other. But the common denominator of all these people is they have high incomes and are able to afford custom-built homes with a decent amount of land around them.
I think it's important for investors to understand the philosophy that I've implemented successfully in investing here. And that is, in any market, it seems, the higher the end homes, the more prestigious locations, the better destinations, you know, the old real estate analogy, location, 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 those are the ones that are not impacted by prices. They're not impacted by downturns, whether you're on the top end of the wave on an upward trend or the bottom end of the wave. They tend to stabilize. So our philosophy, and my personal philosophy, is if you're going to invest in something that has the biggest chance to be a win. And the biggest chance to be a win in this market is the non-row house, the better quality, a better location, better destination subdivisions. And that's the kinds of product that I have invested in personally, and that's the kind of product that we've been able to successfully acquire, and that's the kind of product we would continue to invest in and spend investors' money to develop.
I think there will be consistent demand for higher priced homes in executive areas, and that demand should increase into the future.
In the last 2 years or so, Alberta real estate has gone up about 40% a year for each of the last 2 years. I don't think you should expect that kind of return going forward forever, but we're still in the early innings of the game. I would say if it's a 9-inning game, we're maybe in the second inning. We've certainly seen a lot of appreciation, but with the amount of oil in the northern part of Alberta and the amount of investments that the oil companies have committed to, literally tens of billions of dollars of new investment for the next 5 years, I think you're going to see lots more appreciation going forward. Some projects that John Tanzani finds are going to be more like 70 or 80%, not all of them, but if you get them at the right price, develop them, sell them to developers relatively quickly, the returns are much, much higher than certainly anything available in the United States now or for the foreseeable future.
The deal flow process is as much a gut feel as it is anything else. If you know your marketplace and you become aware of an opportunity, and especially in a hot market, you have no time to do due diligence. And as you know, I wrote a book on due diligence, so I'm Mr. Due Diligence. You have to be aware of the opportunities. You have to, when you see it, take advantage of that, the knowledge that you have in that marketplace, and you've got to jump and get your feet wet quick. Jump into the pool, but you're not going to jump in blindly. You have to know just how deep the water is and what temperature it is, and I have the good fortune of having that network and having that knowledge.
Well, it's interesting to look at the different kinds of rates of return you're going to get and how long it's going to take to get those rates of return. The funds that I'm involved with are going to have basically 3 time frames. The first would be short term, which would be maybe 6 months to a year and a half, something like it, from the time you put your money in to when you get your return, or at least when you get dividends from that corporation. The second would be medium term, would be like a year and a half to maybe 3-year projects, which maybe take time to build and develop and get the approvals and so on. And then there would be longer term projects, which might take 4 to 5 years to fully develop. In general, the longer term projects are going to have the greatest returns. There's a completely undeveloped lake we're looking at, for example, that might take 5 years to develop, but the profits on that could literally be in the tens of millions of dollars to develop an entire resort property over a 4 to 5 year period. So the returns could be very high, or if you have a longer time frame. I'm going to try to do some medium term, some long term, and some short term projects to keep having investors get their returns as quickly as possible.
The Alberta Advantage is real. This isn't a bubble. This is a long-term, growth-oriented economy. We've got a government that's supporting business. There are no restrictions for foreigners owning real estate in Alberta, provided that the real estate is within an incorporated body. So the government's attitude is that foreign investment is a positive to stimulate economic development, and real estate investors are a fundamental part of that process. So as long as you invest within an incorporated body, there are no limits to what you can hold, no limits to what you can invest. If you get outside of incorporated bodies, there are some rules there. But as far as the investors are concerned, our government is very, very pro-investment, very, very pro-foreign investment, foreign visitors, foreign ownership. The fundamentals of why here, why now are absolute. We have the world's largest untapped known reserves of conventional oil in our tar sands at 278 million barrels. That's more than Saudi Arabia. So that oil resource will be developed over the next 10 to 15 to 20 years, absolutely. So that is a fundamental reason of why be here in advance. The Alberta Advantage, the lowest tax rates, the lowest income tax itself, the lowest property taxes, the higher return, a disposable income on your money, is going to continue to draw people here just for that reason alone. The increased expenditures, the continuing expenditures in the oil and gas development are going to require support. They're going to require support services, support businesses, and that's not going to change in the next decade. So from an investor's perspective, I can't see a negative. You know, what more could you want? You've got growth assured over a decade. You've got in-migration of people who want beds. I think this is the best place for real estate investment in North America.